Hello, everybody, and welcome to the show today. Today, we're talking about getting money. We're talking about getting money when you typically think you won't qualify. So whether you're high-risk industry, you're nonprofit, you have credit issues, there's a lot of reasons that we find entrepreneurs think that they can't qualify for financing. And we're going to talk about how to get business loans, even if you're one of those people that think you cannot qualify. So for those that don't know me, my name is Ty Crandall. I'm actually the CEO at CreditSuite. And at CreditSuite, this is what we do. We help businesses get capital. We help you do so by improving your fundability, by building your business credit, and by accessing all different kinds of loans and credit lines. So if we can help you along the way, feel free to give us a ring at 877-600-2487. Email us, info@creditsuite.com, or visit us online to get approved at creditsuite.com/get funding. Okay, so conventional banks have really strict qualification requirements. And this is one of the biggest mistakes that I see business owners make, is that a lot of people think that they're going to go to their bank to get money. The problem is that's definitely not the place to start in almost any case, unless you're very low risk borrowers. Okay, these are just not the place to go if you're looking for a startup loan, if you have personal credit issues, if any factor that you probably think will hold you back from getting a loan is going to hold you back at the big banks. I mean, they're going to want 2 to 3 years worth of tax returns. Those tax returns are going to need to show growth. The tax returns are going to need to show profits. And again, even if you go through this, if you don't have the collateral, if you don't have the cash flow, if you don't have the credit, if all of it's not verifiable, if your resume doesn't look good for the experience that you're bringing to the industry, et cetera, you may be lucky to walk away with even a single credit card. Okay, it's over 89%. I mean, almost 90% of business application by these big banks are denied. So you got to think about that. When you walk into the bank, they may tell you that they need 100 different documents to get approved. This is the people that actually supply all those documents. Even those, almost 90% of them end up getting denied. So again, I want to start out here by telling you where not to go, because I see a lot of business owners just give up and think they can't qualify because they start in the wrong place. And you don't want to start at your bank because they're not going to approve you. And then that can make you disgruntled and not want to go somewhere else that actually can approve you for financing. So let's talk about what lenders want to see. Well, lenders generally want to see this. They want to see you have enough assets to basically cover the debt in case you default. Now, this isn't in all of the cases, but this is some of what they're looking at. They're going to want to see you have sufficient financial reserves. They're going to want to see you have money in the bank or enough money to pay the loan. And they're going to want to see that you have enough personal collateral in some cases as well, especially when you're dealing with these big banks to ride out these business fluctuations. Now, ultimately, when it comes to a lot of the financing I'm going to show you today, there's only one thing that lenders really care about. Really, only one. And it's whether or not you're going to pay back the loan, whether or not you can. All the documentation they ask for, all the things that you're required to provide, it all boils down to one simple thing. Is there evidence that give them a good feeling that you're going to pay back the loan? Okay, so when you think about the things that hold you back, that's probably what's standing in your way. You have credit issues, right? And that reflects that you didn't pay past bills as agreed. Maybe your revenue and your bank statements doesn't add up, where you've got overdrafts and you don't have enough money in your bank account at the end of every month. Then you don't have any collateral to offset the lender's risk. But so again, what it really comes down to amongst all these things, and some look at each one of these, is do you have what it takes to pay back the actual loan? Does it look like you're going to do that? Okay, so how do you demonstrate this? Well, first, you've got to show solid cash flow in a lot of cases, sufficient to repay the loan. So we're going to talk about financing today, for example, like cash flow financing, merchant cash advances, revenue lending. All this kind of money only looks at your bank account. And what they're looking for is to make sure that you have positive ending balances at the end of each month. You have more money going in the bank account than going out. Okay, that you don't have non-sufficient funds. Do you have the money to pay that debt? Okay, they want to see a track record of profitability. They want to see not that you're just making money, but that you're actually profitable. Okay, one of the biggest things that people don't know when they're applying for business loans is this. As business owners, we tend to write off everything at the end of the year so we could show a loss and not have to pay taxes. A lot of our accountants advise us to do that. But I can tell you the difference in the business world between you showing 1,000 in profit, 1,000 in loss is a big difference, because that's the difference between you getting long-term loans and getting credit lines. The bottom line is that if you want the better loans, the SBA loans, the longer-term loans, the lines of credit, you're going to want to show profitability. Now, again, What I'm talking about doesn't apply to all financing. We're going to talk about financing that doesn't even look at certain things like revenue. But again, when you're looking to get the most options for your business, having tax returns that show a profit are a really big deal. Okay. And they want to see if you're going for something like SBA, a success in a similar business endeavor. They want to see that you have experience relative to the industry you're in. This doesn't really apply for anything other than SBA loans, but some things to look out for that they're going to look for. Okay. Essentially, they're just looking to make sure that you're going to be able to pay back that loan. Okay, so conventional loans we talked about, very hard to get. Okay, SBA loans are very tough to qualify because both, first of all, you're applying for two places. SBA guarantees the loan in case of default. And also on top of that, you've also got the actual lender, and the lender, you have to apply, you have to qualify with them. So this is why bank loans are so hard to get. You're qualifying with the lender and you're qualifying for SBA. And in order for that to happen, you're going to have all aspects of your business be very, very good. Business and personal. You need to have good personal credit. You need to have good business credit. You need to have money in the bank for good bank credit. Okay, so again, if you don't have all these things, and I say if you don't have good cash flow, verifiable per tax returns, good credit, and good collateral, banks are not the place to go. Okay, private investors, that's a way to go. Okay, but usually they're even going to want tax returns, and venture capital is not really an option. If you're looking for outside investors to pour money into your business, that's usually not going to happen unless you have a truly unique product or service that could gain a lot of market share very quickly, which means you really stand out from competitors, or you have something where there is no competitors. Okay, they want very quick returns on investment. I mean, these guys are looking to exit in 3 years. So if you don't have an aggressive business plan to make tens, if not hundreds of millions in 3 years, then, private investors, venture capitalists, these aren't the guys to go to. And even if you do go with them, they're going to want a pretty good chunk of your business as collateral. Okay, so don't give up on loans though. There's a lot of loans that you can get even as a startup, even if you're not going to normally qualify. They're just not coming from these big banks. So in a lot of cases, you can go as low as $10,000 with micro SBA loans, $25,000, $50,000, even $100,000 plus in initial funding, even as a startup business. So let's talk about startup loans. Well, you can get financing even as a startup for all kinds of things. First of all, the one thing I like to say is, what special thing do you need the money for? If you need it for commercial signs, well, there's financing for that. If you need it for equipment, financing and leasing, well, there's special financing for that. Okay, you can even get loans to get graphic wraps for vehicles. So I always break this down this way. Think about what you need the money for. Then you have to think about the easiest sources to get that money. Here's why. A lot of cases, what I see is an entrepreneur that comes in and says, I want $50,000 loan. Well, look, $50,000 loan as a startup is hard to get because you don't have any track record that you can make the business successful. Of course, I think you can, but a lot of us think that we can do things, then we get into the thick of things and it doesn't work out like we intended. It almost always works out that in business. Or always works out that way in business. So when it comes to this, startup loans for larger amounts are harder to get. So the very first thing is figure out what you need the money for. List it. Here's all the things I need to buy. Then think about where you can get that money individually that's much easier than getting a loan or a credit line. So for example, if you find that you need $5,000 of office furniture and another $5,000 worth of computers, well, it's much easier to get the furniture from a place like IKEA or Staples where you can get a corporate credit card. You can get that easily in 60 days without a guarantee or a credit check. Maybe what you need the money for is to wrap a vehicle. You want to make your vehicle your marketing billboard. Well, there's financing for that. Maybe you need a huge piece of equipment. Well, don't get a general loan for that. Get equipment financing for that. This specialized financing for each of your individual needs, if you knock this out first, what you'll find is that 70 to 80% of the cash you need, you don't need a loan, you don't need a credit line, you need specified corporate credit cards or financing to get. So always do that. Because I'm telling you, it's so much easier to get the money from multiple sources or smaller amounts than try to get it all from one source. I know. As entrepreneurs, you want to take the easy path. You're busy. You got a lot to do. But the bottom line is trying to get that $50,000 loan, much more difficult than getting $5,000 from Staples, $10,000 from IKEA, $10,000 from Apple, and then only needing a loan for $10,000 to pay for example, payroll. So collateral-based loans. Okay, this is one of your best bets, especially if you have credit issues or if you don't have the cash flow, because lenders are more comfortable if you have assets to offset their risk, if there's something they could take back in case you default. So there's a lot of things that could work there. Stocks, 401ks, bonds, IRAs, inventory, account receivables, and the rates are usually very low. Credit lines, loans, you can get 5% rates or less, regardless of personal credit. So imagine that. A low-end SBA loans right now are about 8%. With this kind of financing, you can get a 5% rate where credit and cash flow don't even matter. All that you have to have is an asset to offset the lender's risk. Now, the other thing to keep in mind here, use somebody else's. Maybe your dad has the stocks. Maybe grandma has the 401k. Maybe somebody else has a huge piece of equipment you can borrow against. 75% of business owners get money from family and friends. So it's easier to get money using their stocks or collateral, 401k as collateral, where they can keep them in place, still earn interest. And the only way they would lose out is if you default on the loan, than it is to actually get cash from some of those people. So whether the assets are yours or somebody else's, it's definitely something to consider. You also may want to work with a guarantor, family member, friends, somebody that wants to potentially invest in the business, okay? Because they can actually come in and, as I mentioned, use their actual collateral to qualify. You can even do the same thing with credit. So let's dive into this. 401k financing, basically in this case, what you're doing is you can get financing for up to 100% of the value of the 401k. So we had a bar owner, for example, that couldn't get $25,000 from his bank, but we were able to get him a $700,000 line of credit using his 401k as collateral. Of course, he's not going to use the $700,000, but it's well more than he even needed. And he got an interest rate lower than 5% because he had his money in an actual 401k. He was a retired police officer that was opening a bar. Okay, so this is fast, easy money to get. The rates are low. And again, you can get 100% of what's rollable, which means 100% of what's not already currently placed with another employer. This is one of the most common programs that's used for business owners to start businesses, especially when there's partnerships and multiple business owners contributing money to get the business off the ground. Now, there's also something similar that's called securities-based financing. It's the same thing. It just uses stocks and bonds instead of 401ks and IRAs. You get up to 90% financing against the value of the stocks and bonds. Rates as low as 1.6%. So some of the lowest rates you're ever going to find. You can get a loan or a credit line. And the best part about this program is the stocks stay in place. You still continue to earn the interest. So again, I come back to the example of family and friends, right? If I'm going to go and I need $50,000 to start a business, I can go to my dad and ask my dad for 50 grand. Well, what's my dad going to do? He probably doesn't have that sitting in his bank account. So he's probably going to liquidate stocks to give me the cash. Why do that? I can go to dad and say, look, I want to start a business. I need a $50,000 loan. Can you leverage your stocks as collateral? You still keep them where they are. You still earn interest. Nothing changes. It all stays the same. It's just I'm using this collateral to get a low interest rate credit line to start the business. The only way you lose is if I default. If I default, those stocks are gone. And put in safeguards where they're comfortable and you're comfortable that those payments are going to be paid. So again, much easier than getting cash from somebody else like a family member, and very easy to do if you have stocks, bonds yourself as well. So another one of the most common, especially popular for SBA loans, is AR financing. It's called account receivable financing. With this, you're basically taking the money that your customers owe you and borrowing against it. So I'll give you an example. One of our clients and a friend of mine owns a big plastic manufacturing company. And he makes those plastic mugs that you see in places like Busch Gardens that have the fancy shapes that you spend all the extra money for when you get the drink, the souvenir mug. Well, when he gets these huge orders from Busch Gardens, they don't pay him. They submit the order. He has to fulfill the order. He has to get the staff. He has to run his machines. He has to buy the materials. He has to do all that to produce those mugs. Then he ships them to Busch Gardens when they're done. Then Busch Gardens may wait 30 to 90 days to pay him. So he's put all this money into producing a product and may wait 3 to 5 months to get paid after that. That creates a huge cash flow crunch that prevents him from getting other business. Well, account receivable financing fixes that. He's basically able to get now, I says 80 here, but now up to 90% against those receivables advanced to him within 24 hours. So instead of waiting 3, 4, 5 months to get paid, when he gets that huge order from Busch Gardens, he can get 90% of that money advanced to him the next day. So if the order is worth $100,000, instead of him waiting 5 months to make the 100 grand with AR financing, he'd get 90% of that. So he would get $90,000 advanced to him in 24 hours. Then the other 10,000 comes to him after that person that, in this example, Busch Gardens pays that invoice. And then the rest of it minus the lender's fee gets paid to him. So the bottom line is, if your customers are paying you on payments, you can use those payments as leverage to actually get financing. Now, a lot of nice thing about AR financing, and I can tell you this is the most common type of financing for SBA loans. So if you're interested in buying another business, well, if that business has their customers paying them on terms, you could use their own account receivables as collateral to even get an SBA loan. It's one of the most common ways people buy businesses. They get SBA loans using the account receivables from the existing business as collateral to qualify. Okay, so a lot of different things you can do here with AR financing. Now, inventory financing is when you're using existing inventory as collateral. Now, you got to have a lot of inventory, about $500,000 or more, but you can get approved for a loan for about a line of credit for about 50% of the value of that inventory with rates as low as 5%. So this is very important. We just had a client this the other day, and I had the conversation with actually last week. What happened was he wanted an SBA loan for $1 million. Well, the guy freaked out. That was his loan broker, because that's a pretty high amount for an SBA loan where he was status-wise. But when I asked him what he needed the money for, he had an inventory crunch. He was dumping all of his money into inventory, and then that gave him no cash flow to use for what he needed. So when I talked to him about an inventory credit line, he said, "This is exactly what I need." We were able to take the collateral of inventory, use that to get a credit line. Now, all of a sudden, he's got an open-ended credit line. He can buy all the inventory he needs. He's got a credit line that still allows him to use for the other growth aspects of the business, using his asset as inventory as the actual strength to borrow and get that credit line against. And again, what's nice, personal credit doesn't matter and cash flow doesn't matter. All that mattered here was his actual inventory to qualify. So equipment financing, you can get financing to buy equipment as well. Now, scores as low as like 520, 580. There's very high risk lenders that will help in this space, but the norm is about 650. Okay, so you can get financing to buy equipment or lease it. Leasing takes about a year in business to qualify. You can also do what's called equipment sale leaseback, which means you basically have equipment you already own, you're selling it to the lender, and then what happens is the lender leases it back to you. It's called equipment sale leaseback. So what's nice about that is if you or someone around you has a very big piece of equipment that's worth some money, you can use that as collateral to borrow against and get financing. So one of my clients, for example, came in and said exactly what a lot of business owners said. I need $75,000 to get the business off the ground. Well, what do you need the money for? Well, 25 of the 75,000 was for equipment financing, was for equipment, a piece of equipment she needed to borrow. So what we did was we went ahead and got the equipment financing for her, and then we got her a credit line for like 100,000 on top of that. So she didn't need to use a credit line to buy the piece of equipment. She got equipment financing for that, and then even used the credit line to pay her down payment on the equipment financing. So it helped her keep more of her credit line intact versus using it to buy equipment when there was specialized financing for that purpose. We just talked about equipment sale leaseback, so I'm going to skip over that. Okay, and there's also other collaterals as well, right? If you want to fix and flip properties, there's financing especially for that purpose called house reseller programs, where you can get 100% of the money you need to buy and rehab investment properties. And again, large part of that is going to depend on if you have experience. You need to have a few properties under your belt to typically qualify. They're going to want average credit, some cash in the bank. They're going to want experience. But again, great way to get money to flip real estate. You can get financing borrowing against commercial real estate. One of the most common type of financing we're helping people with right now is actually buying the properties that they're leasing. And in a lot of cases, they could buy the property that they're leasing or renting without any money down. So it's a great way to go to use commercial real estate to actually get financing. Or maybe you own commercial real estate free and clear or don't own much on it. You could borrow against it to get financing. If you're an insurance agent, you could use a book of business financing. Use your book of business collateral to get financing. As a matter of fact, this is the most common type of financing for people that are looking to buy insurance agencies. So you could use the book of business of the existing insurance agency to be able to use as collateral to go in and buy that agency. So SBA Startup Microloans, okay, this might be an option as well, okay? They're called 7M versus SBA's typical 7A loan. Loans up to $35,000 for working capital. Average loan amounts are about 10 grand, what we find a lot of startups are looking for. Funds come directly from SBA, unlike normal SBA loans. Normal SBA loans are guaranteed by SBA, but offered by a bank. These come directly from SBA, so a little bit different where unlike the normal ones that you see with 7A. Great way to go. You're going to need good credit. You're going to need a good credit that shows that you have a track history of paying your bills as agreed, but you can get it without the revenue. You can get it without the collateral, so you can get this even as a newer business. Now, again, we talked a little bit about cash flow financing. In a lot of cases, they're going to want to see 6 months to a year in business. They're going to want to see about $10,000 a month in revenue. Okay, but it works really well if you don't have assets, really well if you have credit issues. Basically, all you're doing is selling future cash flow. They're going to look at how much you've got going through the bank account and give you about 10 to 12% of that money. Now, the easier way to go is Square and PayPal. Okay, run some of your transactions, if not all of them, through Square and PayPal. That money still hits your bank account, so it still opens up these other cash flow financing options. But with Square and PayPal, they'll often offer loans from $500 to $100,000. Sometimes they don't even do credit checks. But unlike regular cash flow financing, you can get up to 30% of what you have going through there in a month. So if you have $10,000 a month going through your PayPal account, you can get 30% of that advanced to you, $3,000, or $100,000 going through your PayPal a month, and $30,000 you can get. And there's a lot of cases, no credit check, and the fees are very low. Sometimes it's a $500 plus fee. So the loans are not very expensive either. And again, they're very friendly, even if you have credit issues. My advice when people start businesses is immediately open a Square or PayPal account. It's so easy nowadays to get money from PayPal and Square that you should at least have part of your transactions running through them to open up this funding option for you. Now, UBF, unsecured business financing, this is when you can usually get 5 to 8 times the amount of the highest credit limit account you have now. So if you have a revolving credit card for Chase on your credit report with a $10,000 limit, you can get 5 to 8 times that. So about $50,000 to $80,000 with this program. 0% rates for 6 to 18 months. I say get up to $50,000. This is a mistype here. You can actually get up to $150,000. You don't need collateral. You don't need cash flow. Okay, so it's completely based on consumer credit. They're looking for low inquiries, less than 6 inquiries in the last 6 months. They're looking for low utilization, less than 30% utilization on individual cards and across all of your cards. And again, they're looking at good personal credit, that you've got some credit cards with decent limits that you've paid as agreed. Okay, if you have that, you can qualify. Now, remember, you can use a guarantor here. So maybe mom, dad, grandma has good credit and you don't. You can use them as a guarantor to qualify. About half the people we see get this financing aren't using their credit. They're using a guarantor because it's easier to use the guarantor's credit than it is to get cash from those people that you might necessarily go to get cash. One of the best programs, the best program I've ever seen for startups. I mean, this is phenomenal because all you need is good credit or a good credit guarantor. You get up to 150 grand, 0% rates. Here's the best part. They report to the business credit reporting agencies. So you get 5 to 8 credit lines that report to the business credit reporting agency, so it doesn't show up on you or your guarantor's personal credit report. And then the other really cool thing about that is you're building business credit at the same time. Now, again, if any of these make sense, you can get these and tremendous amount of more access to funding at creditsuite.com/get funding. We ask you, I think, a handful of questions there and then tell you all the funding you can qualify for. And then we never charge you a dime to work with you to get money. So you can go to creditsuite.com/get funding if any of these make sense. Okay, so you can also consider business credit, right? This is credit you can get for your EIN that's not linked to your social. This requires no cash flow, no credit, no collateral. This is money anybody can get, whether you're high risk, whether you're a startup, whether you have horrible credit, whether your bank accounts show negative balances every single month. It doesn't matter. You're able to get very high limit credit cards in your business name without a personal guarantee, without a personal credit check. You don't need to depend on lenders and underwriting decisions, okay, in order to qualify. This is kind of a catch-all. Every single business is able to get business credit. And you can get a free guide on building business credit at creditsuite.com/EIN. Let's recap. Conventional banks, not the place to go unless you have really good credit, cash flow, collateral. Otherwise, they're just not going to help you. Private investors are tough as well. Okay, the only way you're really going to get into private investors and venture capital is if you have something pretty unique that could be really groundbreaking, like an Uber or an Airbnb of the world. Okay, instead, get creative. Use collateral, for example. Okay, use your cash flow to qualify. Use your credit by itself to qualify, or try some of the SBA loans for startups, some of the micro loans. Don't forget Square and PayPal, some of the easiest financing for you to be able to get and fastest financing to get and lowest rate financing to get. All you need to do is just have transactions going through PayPal and Square now. And of course, don't forget about business credit. Everybody needs to build business credit because not only is business credit a way to get financing, your business credit profile and scores are going to determine how much money you're going to get, the rates and terms you'll pay on that financing, whether you'll even get approved or denied. So build business credit to give yourself the chance of having the most amount of money at the absolute best terms, okay? Because that's really going to be important to not have to really rely on lenders, to be able to rely on the credit profile of your business. Okay, now remember, with us, you're getting access to every legitimate funding program in one place. It's one of the unique things about CreditSuite. We pulled all these different places you may go to get money and put them in one place, and you don't pay us fees. Look, lenders pay us referral fees in some cases, not even all cases. That's how we get paid. So it costs you no money to work with us to help you get loans. And since we do so much volume of loans with the lenders we work with, they give us price breaks that we immediately pass on to you. So any of the lenders we work with, you're not going to walk into them and get a better rate than we're going to get, because we do so much volume, we get discounts we're able to then pass on to you. So it's pretty cool because our services are free for you. And on top of that, you're even getting a better terms than you get on your own. And then we also develop a business blueprint. We get you all the money you can get now. And then we give a blueprint to graduate you to term loans, lines of credit, SBA loans. We tell you what needs to be done and help you get it done to move to those next tiers of loans. Our goal is pretty simple. You have an accountant in your corner, you have an attorney in your corner, but you don't have somebody that's whole mission is to help get you money when you need it. We want to be that source. That's what we've done, is put together a program where you basically never need to look for funding again. So if you have any other questions on getting money for your business, give us a ring, 877-600-2487 or info@creditsuite.com. And also check out creditsuite.com/get funding, a handful of questions. And then once you do that, you'll see what you could qualify for. Our team will even call and talk to you about the steps to qualify for more financing, qualify if you don't qualify, or talk to you about the actual steps to get approved. And a lot of the financing we talked about, you can actually secure here in less than 72 hours. If you like this, well then please, if you're watching on YouTube, like, subscribe. If you're listening on our podcast, and leave us a positive review. Okay. And also don't forget to check out our other social channels at creditsuite.com at the top right of our page. There you can access our social media links where we go live on Facebook and YouTube weekly. We have our podcast where you can listen on the go. You can even see our daily tips on places like Instagram and Twitter, all by accessing our social media links at the top right of our page, creditsuite.com. Thanks everybody for tuning in. I hope you have a great day. And don't forget, if you're interested in getting money for your business, visit us online at creditsuite.com/get funding. Thanks everybody.